When you think about the next big investment boom, your mind probably goes to Silicon Valley or emerging global markets, but there are plenty of exciting growth opportunities right within Canada, particularly as the country looks to invest in its own future growth and be less dependent on the US. The Canadian government has committed to investing more heavily into the economy, and today I'm looking at 8 stocks that could be well positioned to benefit from these trends. First up, let's talk about national security and high-tech expertise. We start with CAE, which is also the ticker symbol for the company. If you've ever wondered who trains the world's best pilots, it's often the Montreal-based company CAE. It's a global leader in simulation and training, and they are the primary partner for Canada's defense modernization. The centerpiece, a massive 25-year, $11.2 billion contract called the Future Aircrew Training Program, or FACT. This isn't just a small deal. CAE is part of a joint venture that will be training the entire next generation of Royal Canadian Air Force pilots and aircrew. CAE's own slice of this is worth $1.7 billion, and it will see them build all the advanced simulators. And it's not just planes, they're also providing training solutions for Canada's new fleet of Sky Guardian drones. As the government increasingly adopts a Buy Canadian policy to build its own industrial strength, CAE is a natural winner. In the past 12 months, the stock has risen by around 37%, and it's still a reasonably priced stock, trading at 27 times its trailing earnings, which may prove to be cheap in the long run. Next, we look to the stars with MDA Space, ticker symbol MDA. This is Canada's most iconic space technology company. This is the company that built the original Canadarm, which is a robotic arm used for space missions. MDA's main domestic project right now is building Canadarm3. This is a highly advanced robotic system designed for the new International Lunar Gateway. That's the space station that will orbit the moon. This project is backed by a $1 billion contract from the Canadian Space Agency and involves a supply chain of over 200 Canadian companies. It's a massive national project. And with a total backlog of $4.6 billion, Canadarm3 is just part of their business, which includes satellite systems and robotics. As Canada uses space for everything from climate monitoring to national sovereignty, MDA is at the center of it all. Space stocks can be exciting, but also volatile and risky, and MDA is no exception. Its margins aren't all that high, and over the past 12 months, it has declined by 16%. But at 24 times earnings, it's not a terribly expensive buy, and its market cap is less than $3 billion. If you can stomach some risks, this may be an underrated buy for the long run. Sticking with aerospace and defense, the next stock on this list is Magellan Aerospace, ticker symbol MAL. You may not know their name, but they are a critical supplier embedded deep in our defense industry. Here's a perfect example. Canada is buying 88 new F-35 fighter jets. Magellan's plant in Kitchener, Ontario has a multi-year contract to supply complex, high-tech titanium components for the F-35 program. That means as Canada builds its new fleet, Magellan will see sustained long-term demand. And as the country becomes more dependent on its own defense rather than relying on the US, this could prove to be a huge growth opportunity for Magellan. They also supply parts for civilian jets. This dual role makes Magellan a key player in any Buy Canadian policy. In the past 12 months, the stock has soared more than 60%, and despite the surge, it still doesn't look all that expensive, as it trades at 26 times its trailing earnings. Next up is Bombardier, ticker symbol BBD-B. This is a company that is a pillar of the Canadian aerospace industry. A recent report showed just how big their footprint is. Bombardier contributed $7.4 billion to Canada's GDP. It supports nearly 50,000 jobs and uses a network of over 1,550 Canadian suppliers. When Bombardier does well, that economic benefit ripples across the entire country. With its state-of-the-art manufacturing center for global business jets in Ontario, it's a hub of high-value Canadian production. The company is also making it clear that it wants to be a partner in Canada's future defense strategy. When you're a government looking to support domestic industrial champions, Bombardier is at the top of the list, and it should benefit from an influx of domestic spending. In the past 12 months, the stock has more than doubled in value. At 35 times earnings, however, it's a bit of an expensive stock to own, but it can still have a ton of upside in the future. Next on this list is WSP Global, ticker symbol WSP. If Canada is going to have a domestic boom, someone has to design it. WSP is one of the world's leading engineering and professional services firms, headquartered right in Montreal. They are the brains behind the biggest projects, and the work is already piling up. WSP has a reported backlog of $16.4 billion. That's a lot of work coming down the pipe for the company. To put that into perspective, consider that WSP generated $16.2 billion for all of 2024. There's a lot of growth on the horizon for the company. It's perfectly positioned to design and manage Canada's next wave of nation building. Think nuclear power plants like the Darlington project. Think massive expansions to our energy pipelines and our shipping ports. WSP's expertise in energy, transportation, and green buildings makes them indispensable. In the past 12 months, the stock has risen only by around 6%, but that may have to do with its already high valuation. Its PE multiple is 38. But if you're a long-term investor, this can still make for a good long-term hold. Now, if WSP is the brains, the next company is the muscle. I'm talking about Toromont Industries, ticker symbol TIH. Toromont is the engine behind Canadian construction and mining. They are one of the largest Caterpillar dealers in the world. They sell and service the essential heavy machinery, the bulldozers, excavators, and dump trucks needed to build literally everything. Want to build new housing? You need Toromont. Want to upgrade highways and public transit? You need Toromont. Want to develop Canada's northern resources? You definitely need Toromont. Their backlog as of September 30th was $1.3 billion, up from $1.1 billion a year ago. A national strategy focused on building anything in Canada translates directly into orders for Toromont. In the past year, its shares have risen by around 37%. It trades at 27 times its trailing earnings. Next is Cameco, an energy play. Ticker symbol CCO on the TSX. This Saskatchewan-based company is a global leader in uranium, and it's a cornerstone of Canada's energy security strategy. In a world worried about geopolitics and carbon emissions and massive energy needs to fuel AI, nuclear power is making a massive comeback. It's reliable, carbon-free, and Canada has one of the world's biggest and best suppliers in Cameco. Cameco has a massive contract portfolio with commitments to deliver over 28 million pounds of uranium per year for the next 5 years. As the owner of the world's best uranium deposits, Cameco is a unique Canadian asset. Any policy aimed at expanding nuclear power or securing energy independence for Canada and its allies flows right to Cameco. There are risks with this investment, however, as Cameco stock has already risen close to 60% in the past year, and its price-to-earnings multiple is a staggering 100. It's a premium price stock, and there are still big question marks about future energy needs. Cameco has been red hot of late, and while it can still do well, its high valuation means its returns from here on out may be much more modest. Finally, powering the future isn't just about uranium, it's also about critical minerals. And the green energy transition runs on copper. This brings us to First Quantum Minerals. Ticker symbol here is FM. First Quantum is a global leader in copper production that just happens to be headquartered in Toronto. Copper is essential for everything: electric vehicles, wind turbines, solar panels, and the entire electricity grid. Now, while most of their big mines are currently international, the Canadian government has made building a domestic critical minerals supply chain a top national priority, backed by a $2 billion investment fund and new tax credits. First Quantum is the perfect candidate to leverage this new focus. They have the expertise and the capital to take these new incentives and start developing new world-class copper and nickel mines right here at home. This isn't just about maintaining. This is about new growth backed by a federal strategy to turn Canadian-based champions into domestic producers. Shares of First Quantum are also up around 60% in the past 12 months, and the stock looks expensive at a PE multiple of more than 300. But on a forward basis, which is based on analyst projections, its forward PE is much more modest at just 28. This is a bit of a riskier play as the company has a lot of debt and financing costs, but if that debt is used for growth and pays off, this could still make for a great long-term buy. That wraps up this list of promising Canadian growth stocks. What do you think of them? Do you own any of them, or are you thinking of buying any? Let me know what you think in the comments. Thanks for watching, and please leave a like and subscribe for more videos like this.